Hello, good morning everyone. Hope everyone is well. Welcome to today's usual weekly analysis. So I see a few people in the meeting room. Collins, Karanja, Mbudia, Rogers, Rono, welcome to today's analysis. So as usual, I'll just break down a few things that I'm seeing here and there. Apart from that, the week has been good. I have no trade yet running this week. The markets have been quite choppy, but there are a few setups that are really building up, especially on Aussie dollar and USDCAD. Those are my two main pairs that I'm watching. Gold, if you watch gold, I'm sure, not in a bad way, but I'm sure last week or even start of this week, many people really struggled with the pair, and some people maybe have even blown accounts, because it's common to hear many people coming to our office and finding that people blew accounts with either gold, things like oil, and such stuff. So I hope none of you has done that. Proper risk management is paramount. So I'll show you a few things that I'm looking there. I have a very important analysis that you should pay attention on gold, something that I've been observing over the years. Normally when you have a breakout, what is the follow through? And if you watched or if you went through my analysis that I shared on Discord under my market structure strategy, the links that I normally share and share the updates, I've done a breakdown of what I see, or rather just what I'm expecting on gold. So I'll update it today later on. I think I sent it yesterday. I'll update it today, especially with the bearish close we had yesterday, but I'll share with you a bit here before I do that later on, because you guys are here live. Apart from that, news wise, we don't have anything much. Later on today, I think at night 10 p.m. we have FOMC minutes. So what is that basically? It's basically a breakdown of the last meeting they had, and what it's in more detail for those who are looking or paying attention to what the Feds are talking about, especially about inflation and interest rates, which we're seeing at the moment is really rising. That's why the oil market has really rallied to high levels. Okay, apart from that, now I'll share my screen, show you a few things that I'm watching in the market. I'll start with a few main pairs that I'm paying attention to. Okay, that being Aussie dollar and USDCAD. Okay, so yesterday we saw a strong drop on the pair, but we had a very quick rally after that, yesterday and Monday. Okay, so just to show you what I'm looking, how I think about this market, this is Aussie dollar daily chart. Been having long-term lower lows, lower high pattern, okay, which has been quite smooth, and market has been respecting it. You can see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower. Sort of we got a double bottom here, so we can't really term this as a lower low. Okay, it's a very important signal. Okay, this can confirm either market is changing direction or just a short-term pullback, as long as we maintain this lower low, lower high, lower low, lower high. If you go to the 4-hour chart, if you take this inner circle or inner part over here, we're sort of seeing that trend line being respected. Okay, so I shared this on the analysis as well. Look at this: first touch, second touch, third touch. Okay, good patterns happening over here. Also here we had a flag formation. There we go, which I just removed it so that I can see the markets a bit more clearly. It's a bit noisy here, so you can see that flag, a quick impulsive ABC correction. Okay, so this move, I still seeing it being respected, especially this trend line that has been broken. I believe here to have sort of more or less a retest. Okay, so this is what I'm paying attention to. Look, it's quite clear, quite simple, straight to the point, and I think it's quite a very good risk reward trade. Okay, so what am I looking at? I'm looking at this resistance level that I've highlighted. It's just a short-term resistance level. Okay, you can see this trend line, a breakout, then sort of we're getting a retest over here. Then this pattern that you're seeing here. Okay, so just paying attention to the nitty-gritty in the market, this pattern over here. Okay, what you're seeing, if you go to the 1-hour chart, it's coming in the form of a flag formation. Okay, let's get rid of this. So what you're seeing, look at this. So if you expand it, you're able to see that this was that breakout. You're getting to see this sort of a flag formation. The market is not really forming a very strong momentum to the upside, and I believe this can offer a very good risk reward 1:4 sort of risk reward trade to parachute the market to the downside. So this is what I'm paying attention to, strong attention to. So I want to see, we're getting into the London session, which is starting at 11. I want to pay attention to how they're going to react to this market. I'll also pay attention to the next 4-hour candlestick, which is closing at 1 p.m. I want to also pay attention to how it's going to close over here. So that's how I break down my markets. I look at the big picture, look at the trend direction. I want to trade in the direction of the trend. Then I go to the 4-hour to see the the patterns that are forming. We're having a breakout, a retest, a bounce over support and resistance, and then I come down to the 1 hour to get more or less that timing, okay, a good timing to get into the trade. So that's what I'll be paying attention to on this time frame. What I want to see is how, sort of like what is happening over here, okay. What happened here previously? Look at this rejection of this level. We came, got a spike. So if I see market forming these spikes, especially during the London session, if London session is not able to break above this resistance level, then I'll be timing to get a short level, which the New Yorkers at 5 p.m. can come and get that strength to the downside, sort of pushing the market very, very low, okay. So that's what I'll be paying attention on this one. It's highly on my radar for today and this week. A breakout and a close above that level, then it's an indication I need to stay out of the market. But I'm following the trend direction, looking at this 4-hour chart, just a trend line bounce. You can see that first touch, second touch, third touch, okay. If I go to USD CAD also very good in sorry about that, good pattern formation. However, this one is quite a bit long term. The entry I'm looking for is very quite far away, okay. So if I just zoom out, if you start, yeah, you can just start here. No need to go to the daily chart. The daily chart is more or less saying the same thing. So I'm looking at this market that has been moving high, low. So I'm looking at the dollar in the long term really rising, okay. And in that, I'm looking for the USD CAD to continue to follow suit. The dollar, US dollar gaining against the Canadian dollar. However, oil can really affect this market. We're seeing oil has reached some very new highs around the $90 mark, and US oil. And for those who do not know why I'm saying that, is because US oil is, and USD CAD, the USD CAD is a commodity pair, meaning it follows the direction that oil is really moving to, okay, but not really as perfect. Because what you can see, let's say for example, this whole time the oil market has been moving to the upside. What you need to be seeing on USD CAD is that USD CAD needs to be moving to the downside. But if you go back to USD CAD, you're seeing that USD CAD as well has been moving to the upside, okay. So that's why I'm saying it's not perfectly correlated. Sometimes it can have that disparity, which is totally fine if you understand the markets. That is not new news, okay. But for new traders, they have been taught that they need to follow what oil is doing and all that. But for me, I don't do that. So what am I paying attention to over here? I'm paying attention to the support level at the 1.262 level, where if market is able to strongly drop to that level, I'll be looking for longs, okay. And I'm looking for getting targets at the 1.2835 level, okay, that resistance level that you're seeing here. So sort of market is sort of more or less in a sideways movement over here. There's nothing much. You can see we have not been breaking the high highs and high lows for the past 1.5 weeks. Market has been within this sideways movement over here. So this was a good buy level. It was a good support level to push the market up, which I believe market, if this level can hold, then we might not see this market really dropping this low. But if market is able to drop, I'll be looking for entries at this level. If you go to the 1 hour chart, nothing much here. But just seeing yesterday or the day before yesterday, we got a very strong rally and market fell to the downside, okay, showing that the bears are really much in control of this market. Or rather, not even the bears, we're sort of having a sideways movement. This is just a big sideways movement, and believe you me, after this we're going to get a very strong breakout sooner or later. So it's only best for you to pay attention to what the market is going to say, okay. So that's all I'll be watching on this one. If I go to gold, okay, I want you to pay attention to gold. There's a very good pattern. I'll come to Wall Street 30 last. But gold, what is my ideology on this one? What do I see, okay? So remember, gold, we've been having more or less a sideways movement in the form of a triangle, okay. So we had this impulse to the upside, strong impulse progresses the market in either direction, either up or down. And then we've been having this correction, which we topped at in August 2020. So almost for the past 2 years we've been in this sideways movement, okay. And in that sideways movement we've been forming this triangle, okay. So this week, earlier on, or rather late last week on Friday, we had a breakout, a strong rally to the upside, a breakout over here, which was followed on Monday. And what I was saying in my analysis is that this week, if this market is getting an actual breakout, what I want to be seeing is that market gets that follow through, and meaning that after a breakout, I want to see that continuation to the upside. Of course, market can break out, get a small correction, then continue again to the upside. So that's what I'm paying attention to here. I don't have any bias on this one. This can be more or less an actual breakout and market can rally, but this close for yesterday is really cautioning me not to rush into this market, by pay very close attention. And that's why you're seeing here I kept very important close to watch today, and that's what we got last week. This was my analysis for yesterday. If I go to the 4-hour chart, we sort of had like a channel like formation, okay, over here. So what you're seeing is that market we got this top over here. Market came in the form of high, low, a very steep correction here, then a quick recovery. And what you're seeing over here is that market broke out of this one, got that touch of that resistance level at the 1875 more or less resistance level, and quickly fell back below. Okay, so my question to this was, could this be an exhaustive breakout turned fake out? So meaning, was this a breakout that turned with this momentum and quickly became a fake out? So what that I normally see in terms of these breakouts, okay, what that normally happens is that we get a breakout which rallies to either support or resistance, like what we're getting here, quickly drops back below, and then this correction over here, we can sort of get two things that can happen. Okay, if market is to continue to the downside, you can easily see market is sort of pushing to the upside, sort of getting more buyers into it, respect this level now actually properly, and then we get that rally to the downside. Okay, so if I'm able to draw that, can easily see market dangling to this level back here, and then a quick drop back down. Okay, so that's one scenario that I'm watching. Another scenario is that this market can just continue strongly and continue breaking to this upside and just continue moving further up. Okay, and if that happens, what will I be watching? Remember, there's this bigger channel in formation. Okay, there's this channel like formation. So you should always have two different biases, or even three, that you're always paying attention. If you have one or more bias to the market, then you'll never be surprised when market does something. Okay, because you had both scenarios. It's just that maybe you aren't right in the one trade that you took, but you could see if market breaks this level, this is what I'll be watching. Okay, so that's what I'll be watching on this one. If this level is able to be broken, the 1875, and market closes above it, then my 1875 will quickly turn into support. Okay, just the same way my 1830, we've been talking about this level a long time, 1830 turned from resistance to a support. Okay, so that's what I'll be watching at the moment on gold. So I'm not forcing anything really. I want to see this follow through. I'm just paying attention to what market is going to tell me, and that's what I'll be doing later on this week. Okay, so that's what I have on gold. So like I said, nothing much. I'm just paying attention to the follow through. I want to see what will happen to the market. So you can see my approach is quite simple, quite straight to the point. I'm not forcing anything. I'm just paying attention to the market price action and the structure that the price action is forming. Okay, and I'm trading that. When I go down to now US30, which I'll finish off with because I don't have much apart from that. Remember, this market is in a strong bull trend. Okay, at the end of the day, you follow the direction of the trend until the trend changes. Okay, so we've been respecting the Dow theory. For those who know, the Dow theory is that market has been respecting the higher highs and higher lows formation, and as much as we're still respecting that formation, I'll be expecting market still to move to the upside. Okay, but my significant support to watch, which can break the Dow theory, is one, this trend line that was showing. Okay, so I zoomed out to show this first, second, and third touch. I want to pay attention to that. The other thing I want to pay attention is this support level. You can see this support. Okay, so I want to pay attention to this. Yesterday we could see that market closed with a very bullish signal. Okay, after Monday's bearish pattern, yesterday we got a bullish follow through. Okay, and if you go to the 4-hour chart, it's closed above a significant level. Okay, so if you look at this 4-hour chart, which I'm watching, sort of like a channel formation starting to form after getting support here, we had the 34,200. What you're seeing, look at this, very simple, very straight to the point. I'm not forcing anything. Acted as resistance, broke to the upside, acted as support, went further up, came down, broke to the downside, then broke to the upside, now sort of acting as support. So as long as we're below, or rather above this support level, market can continue rallying, respecting that daily chart formation and shooting all the way up. If not and market breaks back below, then I'll be very skeptical about this one. I don't force any trade because I won't really be understanding what is happening in the market. When I don't understand what is happening in the market, I'd rather stay out and watch and wait for a better signal when things are clear. I don't force anything, so I'm not in any rush to force or to make money from any of these forced trades. Okay, so apart from that, just to cover up what I'm just watching, so I've covered that, and basically to sum up, I'm watching to see if we can get a short on Aussie dollar. So I'm watching Aussie dollar, especially the better part of today, how the daily chart is going to be respected. I mean, how the New York session and the London session is going to react to this resistance level. And long term, I'll be waiting for longs on USDCAD if we're able to get that short to this level. If not, market can break out to this level, break out of this counter trend line and rally quickly to the 1.2835 resistance level. Okay, so yeah, so that's everything that I have for today. I don't have anything much. Remember, those are the main pairs that I normally trade, so I don't really go to the other pairs. Ken will be joining us soon, so he'll be doing the other pairs. I think we've not done them for a while, so he'll be joining us soon, especially next week Monday. And that's why we were asking on our IG poll questions yesterday whether you guys prefer us doing a Zoom session on Monday in the evening at 7:30, because we've been doing it at 10:30 and we noticed some people are very hard to join because of work and all that. So we want to try a different routine and see if we can do it at 7:30, but it's we'll see how that goes. Apart from that, that's all my analysis for today. I don't have anything much. So if you're trading Aussie dollar, watch for that level. It can cause a very good entry. Remember, be patient for candlestick to close. If the market breaks above it, then I'd rather stay out of that market. If it's able to respect it and close with things like a shooting star engulfing candlestick, then you want to get that short level. So if I share just one thing before I go, I think it's what I was sharing on my for those who follow my journal. Okay, if you go to the market structure on the Discord, okay, under the week I've shared this week, I shared it yesterday. So, okay, so I'll update it today because I want to point out a few of those patterns that I'm watching on Aussie dollar and the USDCAD, also as well as gold, but I shared it all over here yesterday. Apart from that, I just wanted to, these trading beliefs, I wanted to share a few things that I wrote over here and what I meant. Okay, so personally I believe the market is random, especially on a micro scale. So I believe that very much, because on a micro scale anything can happen. The markets are random, you can't really tell what is going to happen. But on a macro scale, you get to see that the markets are cyclic and therefore create a predictive pattern. So in the long term, humans are predictive creatures because they repeat the habits that they do over and over again, day by day. It's easy to predict what is going to happen, not on a micro level but on a macro scale, and that's the same thing that reflects in the market. These patterns in themselves tend to be self-actualizing. What I mean is that no one will decide the particular pattern that should form, like pennants, flags, wedges, head and shoulder, double top and the likes. No, the market will form these patterns randomly. Okay, so there's no one sitting somewhere and saying, okay, let's form a flag in the market and trade it to the downside. No, the patterns that I've shown you on the charts, the market is doing it in a random way. But the fact that humans are the ones who trade such patterns, many people will trade it and complete that cycle, which will go as expected. So for example, if you see like a triangle forming and we get a breakout, it's the humans who will see that pattern and they're going to trade that breakout and force it to go higher. Okay, so that's what I was saying here. But this successful trade, if you get into that trade and it goes your way, this successful trade is not the fact that you, the individual, are very good at trading or becoming a trading master, but instead that the market did what the market did, and luckily you were on the right side. Okay, we are the market observers, not the market makers. We tend to go where the market takes us and not vice versa. So pay a lot of attention to that. We go where the market takes us, not where we think we take the market. And the market is going to go, and where the market is going to go is hard to determine beforehand. And that is why we deal with probabilities. And the fact that we deal with probabilities, that's why I really emphasize on under trading. Personally, I can get like at most 8 trades a month, even less than that. Sometimes I can even get 4 trades a month. And this is what I like teaching my students, that the markets, like I was saying here, I was teaching one of my students that the markets are very seductive. They will lure and seduce you into a trade in a very subtle and canny way, only later to realize that this was a deceptive move. Okay, as much as you say you're good at spotting specific patterns, like personally the patterns that I'm used to trading, I'm very good at spotting them, but the outcome of these patterns tend to differ from time to time. I might spot a pattern, take a trade, but that trade will go into a loss. So what I expected is not actually actualized in the market, and therefore at the end of the day you are not trading these patterns, but you're trading what you think about the patterns. Okay, that's very important, and that's why I highlighted it. You are never trading a certain pattern, you're trading what you think about the pattern. If you're just to trade patterns without any emotions, then you wouldn't be feeling any bad whether you get a win or a loss just because you traded the trade. But the fact that you are trading what you think about the pattern and expect, okay, this pattern is an impulse corrective and you're expecting an impulse, the fact that you trade what you're thinking, you're expecting a certain expectation to happen in the market, that means you're actually trading what you think about the patterns and not the pattern itself. We all see these patterns and trade them, but we all get different results. This is what I like to term, we all have equal opportunity but inequality of outcome. Okay, so equality of opportunity meaning we're all able to see a certain opportunity in the market, but the results are all different. And we talked about this in our podcast. We all can have the same trade, but we'll all have different outcomes. One person along the way will become fearful, another person become greedy, another person will follow the discipline and take what was meant to be taken. So that means we'll all have different outcomes or results in that trade. So my main point for sharing this was that my main purpose is for you guys to be able to under trade as much as you can. Under trade. You might see a pattern. That does not mean become fearful, don't take trades that you're seeing, but if you can be able to note the trades that you're meant to be trading and the ones that you're not meant to be trading. Like personally, only trade 1 or 2 patterns at most, and that's only on my 4 pairs. So that helps me under trade as much as I can until I'm able to understand that one trading system in-depthly. Okay, so I think I'll end it there today. You can go through my journal, I'll be updating it. I just share different thoughts that I have. You can check down for last week. I shared a few things about entertainment, cryptocurrencies, Facebook and the tragedy they're having and all that. So those are just my thoughts, and on top of it, what is more important, I share the analysis that I'm looking at on the 4 pairs that I normally trade. So yeah, so I'll be ending it there. So I see Karanja Mura asking 7:30 a.m. or 7:30 p.m. So I was saying we're trying to see if we can be doing the Monday analysis at 7:30 p.m. Not morning, is too early. 7:30 p.m. when most people have gone back home and are not in the working in the office. So we'll see how that goes. Apart from that, thanks everyone, thanks for joining. I think I'll end it there for today, and I'll see you guys on Friday. So have a good week and enjoy the day. Apart from that, I see Roger saying thanks. Somebody's asking, hi Caleb, where is your journal posted? So let me just share with you, for those who are asking. So I have, if you're on our Discord, okay, if you're on our Discord, one sec, if you're on our Discord, here it is. If you join our Discord, okay, you can go to the market structure if you're part of it. One sec, let it load, one sec. So if you're on our Discord, which we normally leave a link, if you watch our YouTube videos, the link is the first link in every video. I think one of the links, not the first link, because the first link is Paperstone. But if you go here and you go to market structure, so under trades and go to market structure, you'll see my links. I leave my links here. So every new week I'll post a different link, and the good thing about this link is that I get to update it every single day. So you can see me, even sometimes if you're on it live, you can see me updating them live. Okay, so go here. I just started it this February, so not even long ago. I think I started on the 7th of February. So join our Discord and go to market structure, and you'll see where I post the analysis. So I hope that's helped Samba. I've seen you saying thanks. Emily's asking, what time will your Friday session take place? So last week, apologies, we did not have a session on Friday, but this coming Friday we'll have it at 10:30. If you have any changes, we'll be sure to tell you guys, but we'll have it at 10:30 in the morning, and I believe I'm the one who'll be doing it. So in part of our structure, I'm the one who does Wednesday and Friday analysis, and then Ken is the one who's in charge of doing the Monday analysis. So yeah, why we do that is because we want consistency of analysis. So if you keep changing the people doing it differently, Monday you might see me saying Ken saying this, Wednesday me saying something different, and Friday Tara saying something different. So that's why I'm mainly the person who's normally doing it, because we want that consistency of the patterns and the markets we're watching. But once in a while we put Ken in it so that he can do the other pairs, things like GU, EJ, oil, which are things I don't trade, but he comes and covers them. That's why we alternate once a week. So I hope that's fine. I think I've answered most of your questions, and yeah, so allow me to end it there, guys. Thanks for joining. I'll see you guys soon. Peace.